Your exam is next Monday and Tuesday.
Yeah.
Yeah.
Oh, okay, good lah. Then 22nd, 23rd, so you got time. Then 27th, then only exam now. Okay, yeah. So okay, 22nd, 23rd. Okay, I will ask. Yeah, I will ask Mr. Myron see how. If he doesn't want to conduct, then I can conduct on 22nd and 23rd. Yeah, and then 22nd and 23rd. If okay, then maybe we can do it in the morning. I think 22nd afternoon maybe cannot lah. Yeah. Okay, later I tell you. But so now your exam is Monday and Tuesday, 20th and 21st. Okay lah. Then
Yeah.
that's good. Okay. Yeah. I'll let you know. Later I discuss with Mr. Naram first. Okay. Okay, so the last tutorial, I already shared with you the answer guide, right? Yeah. Now, so this one is the financial analysis, the ratio. So why do we need to calculate ratio? Is because from ratio it's easier to actually check whether our business is healthy or not, right? What is our profit level that compare to other company, compare with the industry. So if you don't calculate this ratio, you don't know how good or how bad your company doing. Okay, and then when we talk about comparison, right? We want to make comparison. So if when you look at the question, like you see, certain question is compared between two company, right? Like this one, question one is compared between two company, Jasco and Esertan, correct? And then question two is compared between different years, right? Yeah, this one is 2019 and 2020. Yeah, so you will see either you compare between company or compare between different company but same period, or else it will be compare within the same company but different period, isn't it? Correct? Yeah, different period, right? Okay, and then yeah, so like this question, they already give you the 2018. And then not only to make comparison, like part A is the calculation, right? You calculate the ratio. And then after that, part B, they will actually get you to put the comment. Yeah, the comment from your part A, like gross profit as a percentage of sales. So what is the comment that you can actually use? Yeah. Now the comment actually I can give it to you. I think this tutorial answer better give it to you. Yeah, I give you the calculation first. I'm thinking maybe you can try the calculation. And then on the comment part, like the part B, basically the answer for every question, not every answer you can recycle because like question 1B, maybe it's only applicable to question 1B. Yeah, of course. You see, question 1 and question 2 is different. Question 1 is compared between different companies. So somehow you can't really recycle your question 1B answer to be used in your question 2. Because question 2 is same company but different years. Yeah. So when you want to do the comment, right, you have to really study like the background of the company. Yeah, then only you can actually do a good comment. All right. So basically, this financial analysis is the question is they will give you a SOPL and they give you a SOFP. So it's very important that you must know how to use the right numbers. Important, must you know how to use the number. Any one of you have tried? Yeah, anyone have tried? You must know how to use the right number and use the right formula. But I see this one is actually a very common one. Yeah, actually very common. Gross profit is a percentage of sales, so it's gross profit over sales times 100, right? Net profit is net profit over sales times 100. Okay, when you do ratio, another thing that you have to take note is you have to see which ratio is in percentage, which one is in how many times, which one is in how many days. Now, from here you can see, like for example, this question 1, gross profit, net profit percentage means this is in how many percent. So your answer should be like what, 10%, correct? Yeah. Okay. From the answer that I shared with you, you can see current ratio. If the question says ratio, so ratio is basically ratio is basically ratio is basically times up. How many times? 2 times, 3 times. Yeah, current ratio is what? Current asset over current liability. So meaning how many times of current ratio able to cover current liability? Right? Yes. Okay, quick ratio and current ratio is actually very similar. So what is the main difference? The main difference, okay. Now, just in case, right, okay, this one is I prefer you to do on your own. So I give you the number, right? But actually in exam, we actually required, okay, if possible, right, like, if possible, please put the formula, like this one, gross profit as a percentage of sales. You see this answer, they did not give formula. Right? Actually, the way when you answer your question, you should give formula. So you should put down gross profit, yeah, like somewhere here. Okay, you should put down gross profit over sales times 100 like this. So instead of the number you put here, you put gross profit. Okay, and then here you put sales and then times 100. So that's how you get 51%. So make sure you get the right number from your question. If you did not get the right number, okay, then if you don't know how to get the right number, then of course the number is wrong. So this one is for question 1. So and the presentation, right, in exam, when you present your answers, you are using the worksheet, right? Okay. Now, the best thing is you draw table like this, the way you present like this. Yeah, but I would prefer you to put down the formula. Yeah, okay, like number 1 is gross profit as percent of sales, then you put the formula here, just like this one. See, this is the formula. Okay? Inventory turnover, see the formula. Now, inventory turnover, the formula is average inventory. What do you mean by average inventory? Average inventory is actually, what is average inventory? Anybody?
Opening plus closing divided 2.
Yeah, opening plus closing divided by 2. Yes. But the problem is sometimes you cannot find opening. Then how? Okay,
Assume 0.
let's say okay this question no problem lah. Isn't it? Then you see opening is here, okay, and closing is here. Okay, for this question no problem. Yeah, what happens if those questions where you do not have opening? Normally you do not have opening. Yeah, maybe okay, like for example this one. Where is your opening? This question you can find opening. Actually, you can find opening. Now, the opening stock for 2019 is this one now, correct? This is the closing for 2019. Because this question asks you to do 2019 and 2020, right? Okay, so for this question, you can also find opening. 2019 opening is this one, right? Because 2018 closing equal to 2019 opening. And then this one is 2019 closing. Okay, for year 2020, can you find opening? Yes. This is your 2020 opening. This is your 2020 closing. Right? Correct? Yeah. Okay, so question like this, okay lah. Now, you know why I say, for example, if you look at question 2, if the question do not give you 2018, let's say no 2018, only 2019 and 2020, and you look at the SOPL, only put here cost of goods sold. So how do you actually find the opening? Okay, sorry, my dad called me. Okay, yeah. So, right. So let's say if there's no 2018, it's only 2019 and 2020, and here they only put cost of goods sold. There's no breakdown like how much opening, how much closing. So how do you find average inventory? So in this case, if there's no 2018, only 2019 and 2020, and there's no breakdown on your cost of goods sold. So macam mana? How are you going to? Can you still use the formula average inventory? Can or not? And remember, when you do comparison, if 2019 you use this formula, 2020 also, we expect you to use back the same formula. Yeah, so if you really cannot find opening, then macam mana? How?
Can assume 0.
Okay, in this case, you only take closing stock off. So meaning you only take closing stock off now. So meaning your closing stock will be here lah. Right. Okay. Yeah. So you only take closing stock lah, then this one lah. You use this one lah. No need average lah. No need average lah. Just take this one. This one for 2019, this one for 2020. So in certain situation we cannot use average lah. Yeah, so average is opening plus closing divided by 2. But so you have to see the question. Some question I don't think you can have the average now. Right? So if you can't find the opening, right? Okay, for 2019 now. 2019, if there's no 2018, right? 2019 definitely you cannot find opening, no? But 2020 can. 2020 can, yeah? This is opening for 2020, this is closing for 2020. So meaning 2019 you only use closing. But 2020 you can use average. So you see it's not consistent, isn't it? Right? So in this case, 2020 forget about average, you also use closing. So both years are closing. Yeah, okay. So in this case, both years are closing. All right. Okay, so have to remember, yeah. Now, and when you calculate a ratio, right, you see the answer that I give you in days. Now, sometimes maybe you can't decide. If you want to put decimal for days, can? No problem. For me, no problem. I can accept because, yeah. Normally, your final answer, like this our answer, right? We expect you to actually give 2 decimal. I mean, if you want to be accurate, normally it's 2 decimal. Okay, 2 decimal is actually acceptable. Yeah, if you want to round up, also can. Because if I mark this type of question, right, I am not only looking at the final answer, I will look at your working. I will look at your working. I will see. I will look at your working. Yeah, I'll look at your working. Not only to look at your final answer. Yeah, you know what happened? Because sometimes you actually careless. Your working is correct, no? This whole thing is actually correct. But your final answer is wrong. Careless. Okay? Punch the calculator, punch wrongly. Right? So I will look at your working. So in exam, please put down your working. So this is what we call your working. Yeah, and then please put down your formula. Like this one is current, yeah. Like this one is current asset over current liability, right? Okay, quick ratio, okay. Current ratio and quick ratio, they're actually very similar. This one is current asset minus inventory, correct? Divided by current liability, right? So this inventory is definitely a closing. Okay, it's closing. Where do you get this inventory number? It's actually from your current asset. It's actually from your current asset in your S&P. So this inventory is definitely closing. You cannot use opening, no? Must use closing. Yeah, must use closing, yeah. All right, okay. Current asset minus inventory. So this inventory is the closing. So basically when you do quick ratio, you need to minus the inventory. So your number is actually, where do you get your number then? From this part, from here, from your current asset, and from your current asset here, right? This part from your current asset here. Yeah. See, you have an inventory. 31st August is actually your closing. So basically, you minus your closing inventory. Okay. So for this chapter, calculation was is actually very easy, but make sure you actually use the right number. Make sure you use the right number. Yeah. So don't careless. Make sure you use the right number. Like for example, current asset. When we say current asset, is we actually talk about total current asset, right? So total current asset means which number? This number. You don't go and take 212. 212 is not. What is 212? 212 is non-current asset plus current asset. Right? So I have to be careful. So 150. So current asset is 150. Non-current asset is 62. Okay. So read your question carefully. Now same goes to this one. No? Now this is current liability, right? This is current liability. This one is current liability. Is it? Yeah, this is current liability. Okay, this one is equity. Okay, only equity. Okay, only equity. Only equity. So if you want to know share capital, this is share capital. Yeah, so be careful. Okay, gross profit. This one, right? This is your gross profit. So make sure you take the right number. Sales. This one is your sales, correct? Yes. Yeah. Okay. Net profit. So make sure you take the right number. So don't simply take the number. Now I see here, is it the question so good? This one even give you the 2017 closing inventory. 2017 closing is equal to 2018 opening. Yeah, it's equal to 2018 opening. All right. Okay. So anyone of you have tried any of the question? Anyone of you have tried?
No, we just learned it this morning.
I just learned this morning. Yeah. Okay. Then we can do one question now. I think the question that they ask you is more or less the same. You see, this one question 1 and question 2 same formula. I say this answer is good. You see, with all the working. This is what I mean. In exam, please present your answer in this way. Yeah. Draw your
We need to
table.
write the formula also.
Yes. Please write the formula.
The gross profit over sales.
Yeah. Gross profit over sales per 100. Write the formula. You know some marking scheme, formula has marks one more. For degree, maybe not so sure, but normally for diploma, formula actually has marks. For degree, maybe not, but it's good that you put down your formula so that you yourself can use it as a guide, isn't it? Right. So no harm to actually put the formula. Yeah, all right. Okay, so like I told you, average inventory depends. This one. Okay. So have to check. Yeah, have to check the question. Trade receivable over sales. So we assume all our sales is credit sales, or in this case, and in this case also we assume all our purchases is credit purchases. Now you see this one, you see this part here, you see this part here, you see this part here. Okay, you see this part here. You see, you actually need to calculate purchases. Because your formula require you to use purchases, so you must use purchases. So if you need purchases, then you need to calculate purchases. How to calculate purchases? So make sure you know the formula. Your purchases is under cost of goods sold, right? Yeah, so you use your cost of goods sold formula to find your purchases, like here, like this one showing. Yeah, because you know, right, your cost of goods sold is actually equal to opening stock plus purchases minus closing stock, right? Correct? Yeah, but in this case, we want to find purchases. The question gave us cost of goods sold. We have opening, we have closing stock. So can we find purchases? Yeah. So once you found your purchases, then only you are able to, okay, you are able to actually find the trade payable days. Yeah, the trade payable days, right? Okay, now for gross profit margin, this one is actually, we only look at, this one is without expenses, without your operating expenses. It's only on your sales and your purchases. Yeah, okay. Net profit, this one is including your operating. So meaning from your sales, from your purchases, then including your operating expenses, then you get a net profit. Okay, current ratio. Current ratio is actually, we want to see the liquidity. So meaning, right, how many times of asset you have to cover your current liability. So the ideal should be this one. Ideal is 2 to 1. Ideal is 2 to 1. Yeah. 2 current asset, 1 current liability is ideal. Like this one. This one is actually, we can say this is actually healthy. Okay. This one still okay. Yeah. Now when you look at quick, now for quick is 1 to 1. Ideally is 1 to 1. Yeah, after you minus your closing stock, the idea is 1 to 1. So like this one is okay, can say it's healthy. This one maybe will have some financial problem. Yeah, all right, okay, yeah. So this is actually to check on the operation, how we maintain our current asset and current liability. Yeah, we are talking about in short term. We are talking about in short term. Current ratio, current asset and current liability is actually short term. So meaning in short term, within 1 year, are we able to have enough current asset to cover our current liability? So meaning within 1 year, if we if we want to settle our trade payable, do we have the ability to settle our trade payable? So you need to check your trade receivable, right? How much your trade receivable you have, correct? Yeah. Okay. Inventory turnover number 5 here. This one. Okay. This one is actually we want to calculate how our inventory. You know, inventory is for you to resell, right? So you want to check. Okay. How long does it take you to actually clear your inventory that you purchase? Yeah, like once you purchase one batch, how long would it take for you to clear your inventory? Now, so for inventory, right? You see, this one is in days. Can it be in times? Can it be in times? Yes, the answer can be in times. You know? Yeah, it can be in time. Now, if in times, your formula will be cost of goods sold divided by average inventory. And yeah, uh, no need to times. So because in times is how many times? So if it is in times, the more times the better, right? The more times the better, meaning the more time that you order inventory, the better, meaning it's sellable. You're able to sell it fast. That's why you always restock, right? So for inventory turnover, okay, for inventory turnover, the more times that you turn is better. Now, if you in terms of days, the shorter the days, the better. Meaning the shorter the day you hold the inventory, the better, right? If you hold it for a long time, meaning you cannot sell, correct? And you know, some of the product like handphone, like computer, the new version, right? The latest version keep coming. So if you can't sell it fast, so I want to ask you, who still want to buy the old model? Nobody wants to buy the old model, right? So meaning you are making a loss at the end, right? So in terms of days, the shorter the days, the better. Like for these two, of course, this one is not so good lah. Just take too long. Take like more than 2 months, only you're able to sell, so it's too long. So for days, we want it to be sell out as fast as possible. Correct? The duration of holding the stock, the shorter the better. Yeah, the shorter the better. Now, so all this you have to understand. Then only you can write your comment. You know, all these right you can and then you put into your comment. Yeah, right. Okay. For trade receivable, how about trade receivable? Is it the longer days the better? How about trade receivable? Trade receivable days means what? What do you calculate? Anyone? What do you calculate?
Trade receivable.
Yeah, trade receivable meaning we are calculating how fast we are able to collect from our customer. So is it the faster the better? Is it the
yeah.
faster the better? Is it the faster the better?
Yeah.
Yes, right?
Yes.
Because you want your customer to pay you, the faster the better. Okay, so the faster the better meaning in terms of number of days, the shorter the better. Right? You see, like this one, wow, take almost 3 months only you're able to collect, or I cannot. Yeah, because you need to collect from your customer so that you are able to pay to your supplier, isn't it? Right? Okay, now how about trade payable? Trade payable, is it the longer the better? Trade payable is we are paying, right? We are paying. Is it the longer that we take to pay the trade payable, the better? What do you think? Is it the longer the better for trade payable? Yeah, trade payable days.
No,
Yeah, why? Why no?
because
Because
we need to maintain the relationship with the supplier.
yes, you are right. Yeah. So even though trade payable, we said that of course, if the trade payable give us a longer credit, the better, isn't it? Because we want to collect from customer, then only we can pay to our trade payable, right? Now, if you want to have a good relationship with the trade payable, yeah, please do not delay too long. Okay, so trade payable are not the longer the better, no, right? Trade receivable, the faster the better, right? Because we expect to receive the money faster the better. Yeah, for inventory, the shorter the days, the better. Prove that we are able to sell faster. Able to sell faster meaning we're able to sell the latest model. Latest model normally costs more. Cost more meaning your profit margin can be higher, right? So that's how you make money. Okay, that's how you make money. Yeah, right? Okay, let me see this one. This is actually the answer. Actually more or less the same. Yeah. I think I will share with you the answer for. Okay. You see all the question, right? The requirement is actually the same one. So you see, so you expect in exam also this 7. Okay, now, so can we do this one? Question 1. This one also I give you answer, right? Okay, now we do this one. What me question 1? Let me turn to my questions. Then I need to check my sheet. Okay, right. So we look at the question. Yeah, you look at your question. Okay, so this is your question, right? Okay, calculate the following ratio for 1/6 and 1/7. So gross profit, net profit, inventory. These are all you are familiar with. Yeah, okay, state the possible reason for and significance of any changes in the ratios shown by your calculation. Okay, bright stars, remember, 1/6 and 1/7. So meaning we compare within the same company but different years. Yeah, different years, right? Okay, so for the first is gross profit. Okay, so I turn to my worksheet here. Okay. Right, this is our last tutorial. Tutorial 13. Okay, last tutorial. 13. Right, okay, so this one, 2016, 2017. So you can put down your, right, and then this one is, let's say it's number, so number I, right? So this is gross profit. Gross profit ratio. Okay. Gross profit is a percentage of sales. So this one you can put down your formula. So it's your gross profit divided by gross profit divided by sales. Yeah. Okay. And times 100. Right. It's the same. You put like this, right? Okay. Then here is 2016. So 2016, you put your 2016 number. So gross profit from your question. So gross profit is this one, right? Yeah. This is your gross profit, right? Okay, 48.75. So the 30 on top. Now, I'm not going to put the 30. So just put sales. What is our sales? Sales is this one, right? 198,282. Yeah. So this is 198. Okay. So let's put up. Okay, follow your formula, what you have put down, 100%. So this one, you can put like this. Yeah. Okay. So this one would be 75 times 100% divided by 282, right? Okay. This. So I'm going to make it nicer. So you put in the middle of this. Right? Okay. Then your answer. Then you put your answer here. So your answer equal to, so equal to how many percent? Yeah. So you put no. So okay, the calculation wise should be no problem. You know how to calculate. So at the end, because this one is in percentage, so your answer is 24.2%. All right. Okay. So that's how you present your answer. Yeah, in exam. Can if you want to have like a bigger space, you can do like this. So you insert one more, one more column like this. Also can. Yeah. So that it like looks like separate a bit. This one also you can actually do like this. So it depends on how you want to present your answer so that it actually look neat like this. Yeah, okay. Then this one, okay, so answer you already have. So my intention is to show you the formula now, yeah, right? Okay, so for number two is net profit, correct? Okay, net profit ratio, so it's net profit times 100% divided by sales. Right? Okay, divided by sales. Okay, then same thing lah. Okay, so I just copy lah. But of course I changed the number. Right? Okay, because I changed the number now. So net profit, how much is our net profit? Net profit is basically, okay, this one's slightly complicated. See, which one is your net profit? You look at this part here. Which one is your net profit? Net profit before tax or net profit after tax? What do you learn in your lecture note? Which one? Before tax or after tax? And the question did not say whether you use before tax or after tax. So how?
Before.
Which net profit is that you're supposed to use? Which one? Before tax or after tax?
I think before.
According to your lecture note, mana satu? Which one? Before tax or after tax? According to your lecture note?
I think
Before.
Before. Okay. Now, before is this one. Before is this one, yeah? 11 and 24. All right? Okay, so 11. So this one, I just changed one number, right? The sales is the same. Yeah, 24. Okay. So you see how I do it. So in exam, you know lah, pandai you can copy and paste. But be careful, you don't short copy and paste and you forgot to change the remember to change the final answer, yeah? All right? So have to be careful. Okay, so okay, like this. Yeah, okay, so I leave it to you. Okay, now number three is what? Inventory turnover. Okay. Okay, inventory turnover. So what is the formula now? Inventory turnover, like I say, it can be in times, it can be how many days. So which one? Okay, you look at your question. The question say times. Question say times or isn't it? Then question say times. If times, then you do times. Yeah, so please be careful. So if it's times, then we use what? Cost of goods sold, right? Okay. Cost of goods sold divided by closing inventory. Like this. So this is your formula. Yeah, okay, this is your formula. Okay, so cost of goods sold. How much is your cost of goods sold? 150 divided by closing stock. Okay, closing stock. Okay, so cost of goods sold. Okay, cost of goods sold is here. Right, yes, cost of goods sold. Then where's your closing stock? Okay. From here you can't see closing stock, It's inside cost of goods sold. There's no breakdown. So where's your inventory? Inventory is here. This is your inventory. Okay, this is your inventory, right? Yeah. Okay, this is your inventory. 35. Oh, I think this one they use average. Now, can you use average? This one. Can you use average? Can you use average or not? This question. Yeah, this
Can.
question actually use average. Can, You see now got 201. This is the opening. Yeah, this is the opening.
Oh.
Opening is here. Closing is here. So meaning 2016. Can you use the average? Yes.
Oh, can.
Can, right? So that's what I meant. So meaning, you see your opening is 50 plus your closing which is 20, right? Okay, so put it in bracket. Yeah, okay, and then you divide it by 2. So meaning this is 150 divided by 35, right? Right now, yes, 150 divided by 35. Yeah, so the answer is 4.3 times. Okay, so for 2017, okay, cost of goods sold is 207 divided by, now this one, can you find the average? Can you find average? Yes, 20
yeah.
plus 30 divided by 2, right? Okay, can I? Yeah. So this is how you actually do it, yeah? Okay, so make sure you use the right number. Okay, so the other year you do it on your own. Huh? Okay, now number 4. Number 4 is trade receivable turnover days. Trade receivable turnover days, right? Okay, trade receivable turnover days. Now they actually in days. Normally trade receivable is in days. So in days, then your formula is trade receivable times 365 days divided by your sales. Okay, yeah, because 1 year is 1 year is 365 days, so now our answer is in days, so you times 365 days. Okay, now some question, sometimes the question will say like that, oh, the company assume 1 year only has 360 days. So if you see this sentence, then this here, instead of 365, you should use 360. Yeah? Okay, so read your question carefully. Okay, read your question carefully. Yeah.
Need to
All
check
right,
if
follow.
it's
Sorry.
need to check if it's the year is what year, like
No need to check which year. It's either, normally we use 365, but some question they put 360. So if the question say 1 year is only 360 days, so you use 360. So depends on your question. Okay, depends on the question. Okay, now trade receivable is here, right? 25 and 28. Okay, 25 and 28. Yeah, right. So when we come back to here, so we put 25 times 365 divided by sales. Sales is the same sales on top, 198, which we already used just now. So we can use back the same number. Yeah, anyway, sales is only one number. Okay.
is it possible 366 years? 366 days.
366? No lah, 365 lah normally. Okay, so this one, the answer is 46 days. So you put that 46 days like that, right? Okay. So for the other year is 28, right? Times 365 divided by the sales is 282. Okay, yeah. This. Can I? Oops. Okay. So in exam, you do your answer like this. Okay, then number 5. Okay, number 5 is what? Trade payable. Trade payable turnover days. So it's days. So this is your trade payable times 365 divided by purchases. So for this question, do you need to find purchases? Remember just now the one that I showed you? There's only cost of goods sold. There's no purchases. So are you able to find purchases? Yeah. So for this question, you need to find purchases, isn't it? Yes, you need to find purchases. So how much is your purchases? For purchases stated here, no. The nearest you get is this one. So calculate. Calculate purchases. Okay, tell me, 2016, how much is the purchases? Come, everybody, do some calculation now. How much is purchases? How much is your purchases? You use your cost of goods sold formula, right?
Yeah.
Opening stock plus purchases minus closing stock. So since for 2016, cost of goods sold is 150 equal to, do we have opening stock? Yes. Plus purchases minus closing stock, which is 20. So berapa lah your purchases? So how much is your purchases? Can I find?
5,000, 50,000. Negative.
How to find 50,000?
Plus.
Okay, let me use my pen tablet to show you the Okay, now I can show you the working, so you can calculate. All right, so for this question, if I want to find purchases, now our formula is like this, right? Opening stock plus purchases minus closing stock, correct? Yeah. So meaning, if you use this one, so you put your number in, so for 2016 now, okay, 150 equal to opening stock is 50 plus purchases, which we are going to find, and minus closing stock is here. Yeah, it's here, so it's 20. So how much is your purchase? Yeah, how much is your purchase? Okay. Purchases is somebody X. Yes, you're right. Yeah. Purchases is 120. Correct. Yes. Yeah. Purchases is 120. You see, 50 minus 20 equal to 30. Right? 30 you put over, become 150 minus 30. So purchases is 120. So if you want to check whether your answer is correct, right? So you put okay from here, 50 plus 120 minus 20. Is it equal to 150? If equal to 150, then this is correct, isn't it? Correct? Yeah. So use the cost of goods sold formula. Okay.
Yeah.
Now, the answer that I give you they actually use cost of goods sold. They did not calculate purchases. Actually, by right, should calculate purchases. So the answer that I give you, right, last night was it? No, the night before. It's different, huh? Yeah, okay, it's different, yeah. So, trade payable, our trade payable is 15 and 12, yeah. Okay, so 15 by 365 divided by 120, right? Okay, and this one is 12 times 365. 365. Okay, divided by, okay, now, so this one you need to calculate, okay, use the same formula, like the one in 2016, then you should be able to get your answer. So this answer might not be exactly the same as I give you, so let's calculate. 15 times 365 divided by 120, so it's 45.625. So, well, you can put 45.6 days. Okay, so is it the same as I give you? Oh, I give you is 36. I give you the answer is 36. Because why 36.5? Because did not calculate purchases. The question actually use cost of goods. The question actually use cost of goods. So if you use purchases, then your purchases is 120 now. Okay. So the correct answer should be 120. And so for 2017, okay, I leave it to you to calculate. First, calculate purchases first. Okay, then only you use your purchases amount to calculate your trade payable turnover. Yeah, all right. Okay, and next
Miss,
we have
the purchases also need to show the working.
and
Oh,
better show
okay.
the working. Right. Okay. Then the next one is current ratio. Current ratio, your formula is current asset over current liability. So this one is the ratio. Okay, ratio. So it is all right. Current asset over current liability. Now, when we say current asset means the total current asset, huh? Total current asset. Okay. Now tell me, Farah, how much is total current asset? How much is total current asset for 2016?
Uh,
Do you know how to read your number? So which one is total current asset only? Yeah, I only want current asset. How much? For 2016?
45,000.
Yes, 45. Okay,
oh,
so
okay.
it's 45. You know why or not? 45. See, this number is non-current asset. It's non-current asset. Total current asset is these two. These are your current asset item. So when I say total, meaning these three number because 16 there's no bank. 16 is a bank overdraft. See the bank is down here, meaning this is actually a bank overdraft. Okay, so it's 45, yeah? Right? Okay, so it's 45. Okay, how about current liability? So how much is the current liability? How much is the current liability for 2016?
20,
Total current liability for 2016.
27,000.
Yeah, 27. Yes. So for current liability, okay, for current liability, okay, for current liability is these two number, right? These two are current liability. Okay, these two. So it's 27. Okay, so I put here 27. Right, so I put here 27. Okay, 25 over 27. Right? So this ratio will give you 1.7. 1.7, is it good? Okay lah. If we say this is 2 to 1 now, okay lah. Okay, now you see the other year. The other year is what? 65 and 12, right? You see this one. Is this healthy? Is this healthy? This one will give you how much? Is this healthy? It's
5.4.
1.7, right? Okay, how about this one? Sorry? 5.4. Is this healthy at 5.4? Ratio is the higher the better?
Yeah.
Is it higher the better for current ratio?
Yeah.
No. The answer is no. It's not the higher the better. You see, when you say 5.4, how do you get 5.4? Because current asset is very high. Okay, let's study the number. You see, wow, inventory got 30,000, trade receivable got 28,000, bank got 7,000. Now, actually, for current ratio, ideally is 2 to 1. As long as you meet 2 to 1 is good enough. If it's too high, like 5.4 is too high. Why I say it's not good? Your inventory, you hold so much inventory for what? It could be your inventory you cannot sell. Isn't it? I mean, this inventory, it could be inventory that maybe part of it you can't even sell. You are making a loss. And trade receivable. And trade receivable meaning what? Maybe the customer owe you like more than 1 year. You still can't collect. So eventually you become bad debts. So that's why it's not healthy to have a high, it's not healthy to have a high current ratio. Yeah. Why keep too much inventory? And why keep too much trade receivable? We want our trade receivable to pay us as fast as possible, right? And another thing, why keep too much cash? No need to keep too much cash. As long as the cash enough for us to use can already. The extra one, go and invest to generate more money. Yeah, so for this one, 2017 is not healthy, too high already. Meaning
Cannot
don't,
answer.
yeah.
Cannot answer both ways, man. Like one, we can answer it's
How
good
to-
and then give justification and then answer it's bad.
Also
and then
can, also can, but from the point of view of accounting, current ratio, we do not encourage too high. Like this one, 5.4 is too high, which is actually not healthy. Meaning the company is not efficient, don't know how to control the stock, don't know how to control the trade receivable and keep too much cash in the company. This is actually not good. So much cash also no use, why you keep so much? Why don't you use the extra cash to do something else to generate more profit in the end? Get what I mean?
So in
Yeah.
exam, you can still answer both ways.
Okay lah, as long as your answer is justifiable, then okay lah. Okay, but I just want to tell you the fact is do not supposed to have current ratio too high. Yeah, all right.
So means must be closer as 2/1 as possible.
Yes, close to 2. Close to 2 is fine. Close to 2 is fine. Yeah, not too high. Of course, too low also not good law. If like very like less than 2, like 1.5 to 1, this is a bit risky law. Meaning the company might have liquidity problem. Is that, yeah, because you are, it's very dangerous now. Yeah, like hardly can cover, like can cover, but you don't have you don't have a lot of spare like that. Yeah, all right. Okay, we come to the last one, which is quick. Okay, quick. Quick ratio is CA minus closing, right? And divided by current liability. So just now your current asset is 45, right? Then you minus your inventory. I remember inventory is not 30, it's 20, right? Okay. And divided by current liability. Current liability is the same number, huh? Current liability is the same number. So you see, in terms of ratio calculation wise, it's very easy, right? Actually very simple. Just that, be careful. Make sure you take the right number, especially like current asset, current liability. Okay, especially current asset, current liability. Read your question carefully. Right? So for this one, this is what 0. This is actually 25 divided by 10. So this answer is actually 0.93. Yeah, so this is below 1. Below 1, you can say it's a bit risky already. So meaning in the short term, we might have liquidity problem. In short term, we might have liquidity problem. Yeah, in short term, we might have liquidity problem. Yeah. Now, for 2017, okay, since the current ratio is high, so quick ratio is definitely also high. Okay, this is actually also high, right? Okay, now, so the comment part, how do you write it? Okay, let's see from here. Yeah, okay, now you got to look at the number also, the ratio. So possible reason for and significance of any changes of the ratio. Okay, number one, gross profit. So we say 24 and 26. So there's an improvement, right? In 2017, improved by less than 2%. So here you say slight increase. So you can use the word like this. So here it says slight increase. Okay, slight increase in the gross profit margin possible due to increase in selling price. Yeah. You see, for gross profit, either you increase your sales or your purchases drop. Then it will bring you to a higher gross profit. Agree? Agree, or not? So this one, you need to understand the relationship, I would say. Yeah. So okay, under what situation? Gross profit. If gross profit increase, is either your sales increase or decrease in your purchases. Agree? Right. Your purchases
Right.
is your cost is small. If your cost is small, your sales increase, then it will be an increase. Now, what happens if sales increase, purchases also increase? But in this case, you need to see purchase the increased percentage of sales, is it higher than the increase of percentage of purchases? If both also increase, however, the percentage increase for sales is higher than purchases, then your gross profit still will increase, right? This is mathematics. You understand, right? Okay, now for gross profit, under what situation gross profit will drop? When your sales actually drop and at the same time your purchases increase. Or we can say when the purchases increase more than the increase in your sales, then your gross profit will be a decrease. Okay, now, so this is how you actually comment on your answer. Yeah, okay, now for net profit, so let's look at net profit. Net profit says what? Net profit as a percentage. Okay. Net profit as a percentage of sales has increased by 3%, is it? Oh yes, increased by 3%. Probably due to some savings in expenses. So you need to tell me, if let's say you say gross profit increased or net profit increased, then you have to tell me why. Why is the increase? Why there's a decrease? So you have to give me the reason. So that's why you must know how to read your information. So you see, like here now, then you go and study. You look at the, but it's very funny. You see, this one expenses only 37. This one expenses 51. And yet the net profit is actually increase. You see, your expenses increase, right? And yet the net profit actually increased by 3%. The possible reason is because sales increase, right? Sales increase quite a lot, right? Isn't it? Yeah.
Oh, yeah.
So meaning, right, your sales increase more than the increase in your cost of goods sold. Yeah. So it will actually then from here, this is the debenture, see? So you go and study your number. So here it says, here your answer says, probably due to some savings in expenses. But if you look at the number, is it saving? No, the expense is even higher, right? So, but anyway, if there's an increase in net profit, then definitely your expenses, you have control your expenses very well. Yeah, in the sense that your net profit will increase, right? Because if your expenses is very high, definitely your net profit will be low, right? Okay, inventory, 4.3 times, 8.3 times. So which one is better? 1.6 or 1.7? For inventory turnover, is it the more times that we turn, the better? Or the less time that we turn?
More better.
The more the better, right? The more times that you turn, meaning the faster that you sell. So that's why the more times that you can turn. So inventory turnover also double, almost double as a result of lower inventories. So probably due to better sales management after the new acquisition of non-current asset that was financed by debenture. Yeah, how do we know that we have an additional asset? Because we have debenture, meaning we have new borrowing. You see here debenture. Last year we got debenture, this year we got debenture. And with this debenture, you see our current non-current asset increase, right? Is it 2017 increase, right? Is it correct now? See this one increase, huh? And is it with the debenture? Yeah. So with the borrowing, then we actually further improve on our non-current asset. So in this case, so that's why it will actually result in a lower inventory where we are better control of our sales management, right? Okay, number 4, trade receivable. This one, the shorter the days, the better, huh? Meaning the faster that we receive our customer, the better. So trade receivable turnover improved by about 10 days due to better collection types. Better collection of debts. Yeah, better collection of debts. You can see from here. Yeah, better collection of debts. Okay, how about trade payable? Trade payable, is it the longer the better? No lah. Of course, not too long. So now current ratio has improved by 3 times. Sorry, trade payable turnover shortened by 15 days. Yeah, here, 15 days. Probably to enjoy better discount for early payment. Yeah. You know why we pay early? You have learned trade discount, right? You have learned trade discount, cash discount. What's the difference between trade discount and cash discount? Trade discount is when you buy in bulk. Cash discount is when you make payment fast. Then you can actually have discount, meaning you pay lower. Yeah, you pay a smaller amount. So in this case, so if you want to take advantage of the discount, so you have to pay faster. Yeah, you have to pay faster. So early, enjoy better discount for early payment. So you're willing to pay early to get the discount. You get discount, meaning our cost is lower. Okay, our cost is lower. Since the company has surplus money in the bank account. Yeah, in the previous year, the bank account was in overdraft. Yeah, previous year, yes, but in 2017, we do have some amount already. Okay, current ratio and quick ratio. Current ratio has improved by 3 times. CSA improved due to better liquidity after issuing the debenture. But I would say not encouraged to have too high. Yeah, all right. Acid test ratio has improved as well due to the same reason in for above. Yeah, actually, these two are actually very, very similar, the explanation. But sometimes depends on if the inventory amount is too high, then after you minus inventory, you can see your acid test ratio is actually become very low, like less than 1. So in this case, meaning then your interpretation, you can say because we hold too much inventory, so must improve on the stock control. Yeah, must improve on the stock control. That's the reason that you can use. I need to improve on the stock control. Okay, okay. Now, so do you? I think I better share with you the. Just now I heard. I better share with you the answer, the comment, so that you have something to refer to, for your revision. I believe your lecturer also have this comment. Do you have this comment in your lecturer? Like from the illustration, from the
Yeah.
example? Yes, right? So, okay, for your level, actually this type of explanation is it's actually short and sweet, not demanding. If you are accounting student today, this type of answer is not can be better. Yeah, the requirement will be higher. So normally we don't accept answer like it's not that we don't accept that we would ask you to give more. Like for example, this one, trade receivable turnover improved by 10 days, which is correct. This is correct. But if you for accounting student, if they only put trade receivable turnover improved by 10 days, actually there's no marks. There's no marks. So you have to continue with the reason. What is your justification? What is your reason? Then only they get marks. But for you, because this is a level 1 and someone you are an IT student, okay. Now all these answer, you see, this answer is actually very straightforward, short and sweet. We can accept. All right. So it depends on your level. Okay. Yeah. All right.
Yes. Does the accounting student take this subject also?
Accounting student, yes. Those who actually graduated from STPM, so meaning they join accounting and finance degree program as year 1 student, yes, they do have. In account for accounting, right? Actually, okay, these are what we call FA, financial accounting. Okay, this is actually what we call FA, financial accounting, FA. Now, for FA, there are 4 FA. Okay, there are 4 FA. You are doing 1043, right? There's another one. Okay, no, they are doing 5 FA. See, there are 5 FA paper. So those who actually join, okay, those who actually join these 2 are in year 1. In year 1. This is in year 2, and this is in year 3. This is for accounting.
Oh.
So 5. So you see, you are only doing this one. You can see this 1043 is the easiest one. It's like it's close to bookkeeping. You know what you need to do in bookkeeping. Bookkeeping normally is only do recording. So that's is our 1043 about. So you do a very beginning for beginners. Okay, for beginners. Yeah. So you have any other question? So for ratio, please try it now. Ratio, right? It's like you see, I do like very easy, huh? I ask you where to get the number. If you can't answer my question, you don't know which number you need to take. Like what I told you, current asset, total current asset, total current liability. If you don't know where to get the number, please be careful. Yeah. So I encourage you to do your question. You do, then only you know whether you're able to get the number. If you don't do, you will never know whether you are okay. Are you okay? Are you getting the right number? All right. Okay. Yeah.
Okay.
Okay. So do you have any other question?
So
Or
Miss,
any?
next week is about the revision for past year paper, right?
Yeah. Revision of past year, or you want to ask? Yeah. After definitely after Tuesday, because next week Tuesday and Monday and Tuesday are actually on leave. So I will come back to work on Wednesday and Thursday, and then Friday 24th is a public holiday again, right? So I will let you know. So basically, because you do not have exam, right? So we can have it, in the morning or in the afternoon, right? I'll let you know. And I will let you know also which past year, or you let me know which past year you want to discuss also can. Yeah. Meaning, right? Discuss past year. We don't have to like go through the whole set. We can actually pick like let's say this set question 2, the other set question 3, the other set question 4. Up to you. Up to you. Okay.
So we do from scratch that day.
Can. Yeah. Because you don't have answer, right? Do you have
No.
any? You don't. You have. Yeah. You don't have any answer, right? So we do from scratch.
Okay.
So if you do from scratch, right, it will take a longer time. So it might take up to like at least I think 2 hours also not enough because you have to explain this and that. So it might be around 3 hours. Yeah. So I will let you know whether I think on Wednesday it's supposed to be in the morning. Yeah, I'll let you know what time and you get ready. I think I only share with you 4 past year, right? So we only stick to this 4. So if let's say tomorrow, Mr. Naram discuss, okay, so that one those already discussed, then we skip. We do the one that we haven't done before. Of course, we can also do revision on certain chapter like certain part. You can also ask question on like tutorial, like certain tutorial, maybe that day you did not do, now you revision and then you do. Yeah, you can't get the number. Yeah, you let me know so that I can project the answer for you, or I can explain the answer. Also can. Yeah. So anyway, I open for you lah. So you can ask any question like question in your lecture note, question in your tutorial, question in your past year. Okay. All right. Okay.
Okay.
So you have any question to ask?
No.
For now, no.
For now, no. Okay. So in this case, okay, then today we finish early. In the past tutorial, we always overtime, right? Okay, today I let you go early, so maybe you can take the time, to do the tutorial. So here we have how many questions? I think we have 3 questions only. So I already done one, so you can do section A, question 1 and 2. All right, so the remaining tutorial, you can actually, if you want to prepare for your next Monday and Tuesday exam, okay, go ahead. Okay, so since you have time for FA, so you can actually do it after the other 2 papers. Second. All right, so I will let you know, on the 22nd, when to end. So I will discuss with Mr. Naran. If Mr. Naran want to do it with you, okay, then I might let him know. Okay.
Okay.
Okay. Right. So take care. All the best in your next Monday and Tuesday exam. Yeah. All the best. Make sure you prepare well. All right.
Okay. Thank you, Miss.
Okay.
Okay.
Thank you, Miss.
Thank you. Bye bye.
Bye bye.